Hey, it's back, and it's Tuesday, July 12th. This will be our chart lesson for the day. And I thought I'd start out by showing you our daily chart as usual. It could be that we're pulling back here to test. This is a little bit congested here. It's like a little tight trading range of a few days. So we could just be pulling back to test that, and maybe we could still go higher. We could continue lower. It's just really hard to tell here. This market's still weak. These are two pretty good sell days, but sell-off type days. But you can see we closed well off the lows today. It looks more like there's actually two legs down, but we did close off the lows, and we're still trading somewhere similar to close around that close now. The markets, of course, this is overnight, so none of this really matters what we're seeing now. It could change completely by the regular open tomorrow, so I don't pay much attention to this overnight stuff until after 8:30 or so tomorrow. We get a better idea of what's going to happen. So as of now, it looks like we could go lower. If we don't get back to this trend line, that's not a good thing at all. That means we may have some room. We could just be stuck going sideways here over to the trend line. That's a very distinct possibility. So just looking at this, I don't see any reason to expect any huge rally, although that doesn't mean one can't come. So to me, it looks like we're going to be working sideways to weekly up to maybe even down. So I don't see anything that says, hey, this market's going much higher. So again, that could change. But as of today, it just looks like we're kind of just chopping weekly to the back towards this trend line. And we haven't made a retest of the high. And it looks like it's going to be hard to do that now without getting a break of that trend line. So I don't know that we're going to get a retest of that high. So we'll just have to see. But that's what we're looking at on the daily. I don't see anything bullish wise here. It looks more bearish if anything. So let's flip over to the intraday chart, the 2000 tick chart, and we'll go from there. Okay, here's a look at our 2000 tick chart, and I flattened this out a little bit, so if it looks a little odd, that's because I wanted you to be able to see where this target was up here. Notice we had this one leg up, and when we didn't get anywhere close to that, that's a sure sign that we're probably going to go much lower. So then you're looking for two legs down, and here's your first leg, and then you had the correction in here, so our second leg started here. And you can see we went much further down than our measured leg, and that's pretty indicative of the fact that we didn't meet this measured leg up here. When you miss a target by that much, it tells you we're going to go much further in the other direction. You can see there was a huge sell-off there, and we did bounce off that late into the close. Just kind of went sideways the last hour and a half, maybe. Not much movement at all, really. So, but there's a good look at it. I'm going to take this back to a normal chart there. I just wanted you to be able to see all that in one. Now let's zoom in here and go through these trades. I mean, early on it was a little flat, and then we kind of broke higher here. I don't have this short-term one drawn, but there's a short-term trend right here. Of course, we had the break. There is a second entry long right there, but that's kind of no man's land. That's an inside bar on top of that. This is really your signal bar, so you really don't want to go long right there. And but when it drops down here, notice you got this double bottom here, and you get a first entry, second entry. So that's a failure. And a nice reversal bar, that's where you want to go long. And if you look at this, it looks like a leg down. Even though it broke higher right there, it still looks like a leg down, a correction, and another leg down. So it still looks like two legs back. You need to learn to be able to see that. I mean, hopefully you can see right there, even though that breaks higher, that still looks like one leg down. And then you get a correction, and then a second leg down, and then it bounces. So you need to learn to spot that. That's a little more advanced. So if you don't see that right away, don't worry too much about it. Just study what I just went over with you and learn to kind of spot that. If you just go strictly by counts, you're going to get some second entries that are failures. You need to be able to understand the context of the chart and what the chart is showing you, because right there was a second entry. But if you follow what we do and you know that we don't like inside bars, and that your signal bar always makes the lows, so you got to use this for the break higher on your second entry. And if you do just those things, and you probably want to draw your trend channel here, and you can see we had a close outside new low, and we went higher. So just follow the rules, and it will help you tremendously. And over time, you'll learn to kind of see the things I'm describing here. So, and that will help you. That will help you a lot. But anyway, prices shoot higher there. This turns out to be a nice entry right here. And you get up here and you actually uh, pull back. Notice there's a new swing low. It's lower than that one. So you get another first entry, second entry, and it fails right there. This is a little bit sideways, but because it's a failure right at the key entry point and it does confirm that trend line, I like going long there. I don't think I would wait and go long up here. The way I would do this was it broke lower first and on the engulfing bar when it went higher. I'd either put my buy stop right there or I'd try a limit order. The only problem with limit orders, you can see these traps take off real fast. You probably wouldn't have got filled on a limit order trying to get a better price. Maybe you do, but most of the time you won't. It will take off without you. So I usually would just put a buy stop right there. I don't know if there's enough room. I mean, there might be enough room there to get out anyway. But that's certainly sideways. You can see there's 1 point. Yeah, so there's exactly, I mean, there's an extra tick in there. So you would have gotten out of that before you got to those highs anyway if you trade that on an engulfing bar. So there's room to get out there. But you can see it takes on off. But you can tell the trap there by how big that bar, and then it had a little follow through, and then they run all the stops, and it takes a little while to build some more movement. There's another failure here, and you might have taken that one. Or actually, I'm sorry, it's right here. But because this was not a very bullish bar and it went back to the key entry point, I'd probably skip that one. That just looks too sideways to me. Again, that's even though that's not an inside bar to the bar left of it, it's inside of both of these bars. So I'd skip that one, and I just don't see another entry until we get over here. And notice you get a pullback, you get a first entry, and it turns down and fails and turns up, and you get a second entry long. Same thing here. I'd probably enter this on the engulfing bar. This one you might enter here, or you might let it break higher and then try a limit order. But again, you're going to miss some really good trades doing that. So typically, if I decide I'm going to take this trade, I'm going to put a buy stop 1 tick above this bar, and if after it breaks lower, if it goes higher, I'm going to get trapped in and go with it. And if you do that, you probably get a runner on that one as well. So there's another failure here, but it's way too high. And you've already got a new high in. You see we don't go much further. Unfortunately, you don't get an entry here until a second entry. And I even marked this one green. It is right off the key entry point, but that is certainly congested. And there's your bar with no body basically. This one's not a tiny body, but there's a second entry short there off a key entry point. So there's reasons to consider that trade. It's not the perfect signal bar either, but I think it probably closes in a slower 1/3. If not, it's real close. So maybe you take that one. There's some caveats to that one to why you might not take it, but then you're just working sideways. And this bar is close to being bearish enough, and maybe it is. I didn't mark it. It is a lower high, and you could call it a triple test, but it closes outside that trend line. I'm just not crazy about it, but it's another one you could argue for. That one's definitely too neutral, and then you just don't get anything else. You can't enter over here on this big bar, really, going at the very low. Drops on down, and we actually do get a break here. Then you get an overshoot. It was kind of hard. That was another thing about this trade. Let me back up to this again. It was hard to know if this was an overshoot, and so you had to be worried that you might get a break right here, and I forgot to talk about that. And so that's another reason I'm a little leery of that trade, because it could easily tick lower 1 tick and fail and make another leg up or reverse back up, because you're looking for a retest of this. Actually, you're not on this one. You already had a break here, so forget that. I'm confusing this with a different situation, but yeah, the problem is you don't know for sure if this is an overshoot. In the end, I don't think it is. I think you get your break here, and then you get an overshoot here, which leads to, you would think, a reversal, but it just kind of works sideways. So you don't want to be trying to pick any lows down here until you've got some kind of trap or something. Finally, you make a little double bottom. You tested this multiple times, and that's support across there after a break and a move up. And so if you've got room back to the EMA here, take that trade. I think there's probably just enough room, and you may catch the reversal. A market that, when the prices test something that many times, especially when you're looking for an end to the move down, uh, prices are probably going to bounce, even if they're not going to continue to go higher. But they run up here and then they turn back down and they're just chopping along. I mark this as a higher. It's a second entry long, and you don't necessarily see this as a range yet, but this is certainly choppy sideways stuff. Right now you're just really seeing support down here, but you've only tested this once, so there's not really, you don't really look at this as a range yet. It's when we turn down here again, and then you're saying, hey, there's probably a range here. But at this point, this is just a second entry long, and if you draw your channel working down, you do get a close outside, a new low, and then you get this little trap right here. So I like, and it's a second entry. Notice the new high, first entry, then second entry, runs up. This is not quite bearish enough to take a short right there, in my opinion. We come back down, and next thing you know, you've got a triple test here. Notice you made that low. You test it once, you test it twice. Look how bullish that is. And there is a second entry long there. So I like that one. Unfortunately, it doesn't go very far. It is a little bit sideways, but you don't, that's a little bit, you might look at that and say, hey, that's a tiny body there. But I think that this is just mostly trying to go lower and can't. And then they actually trap people to the long side and then take it down, but you don't get a chance to short there. So, and of course it bounces down here at these lows, runs back up, and you do make a higher high here, but you can tell that you're running into resistance. And it's possible that maybe your resistance moved up here. If you move that up like so, it fits well, the midline still fits, and that's probably correct. And so you start playing this. And if you do see it, if you did move that up, notice it, actually before we get there, notice that you're turning down there and you turn down again, but look at the support going along here, and then you bounce, and there's a second entry there. You're not necessarily looking for a second entry, but you can clearly see it looks like there's a trend line or something working up there. So if you got room back to the EMA, maybe you take that trade, because I guarantee you're going to trap some shorts on this big bar that only goes 1 or 2 ticks lower, and then it reverses. So I like that one. And of course you find resistance up here again. You might have seen this one as a triple test, but it makes a new high. And so wait on a lower high, which you get no setup there. Then you get a triple test, but it's right into the EMA, and you've got, it's starting to look too sideways. Basically there's another little trading range right there. And so I don't think you want to go short into that. And then you get a failed break lower, but I don't see a signal bar there that I want to go long with. And so you just have to kind of ride this out until finally you make a new high, you get a first entry, and you pull back to the midline, the EMA, and then you get a second entry right there. Runs on up and hits the upper side again, and now you should probably headed back to here, to the low side, which you actually get a close outside, and you're just chopping along. But notice you make a 1, 2, 3 triple test, nice bar at the lows. It does make a new low. I marked it green for that reason, but you're looking for a new high here. So this is real close. You could argue for this to be blue, but anytime you make that new low there. Okay, I'm sorry, my phone was going nuts, so I put that away and turned it off. But anyway, triple test there. You're looking for prices to try to make a new high. There's a couple of different reasons you're expecting prices to maybe go lower. You got the green channel, you've got the range and a measured move that we might meet. We didn't meet that yet. So there's a couple of different reasons to expect prices to, and you got plenty of room back to the EMA here, even if that's as far as we're going, which that ends up, and you can see it turn down right where you would, that's where you would first place you'll worry about. Then the next one would be the trend line. And the next one would be any resistance up here, and then here, and maybe across there. And you can see that's exactly what it fights at all the way up, all of those points. And so that's why you always worry about getting long right into resistance or short right into support, because those areas can trip you up. But we're just chopping along this. We get a breakout. I don't see any reason to go short here. There's not much room back to that low, and you can see we don't even get there, and that was after breaking out, so there's a good chance we could go higher, but it just fails out each side, and each time it's making a new high, so it's too dangerous to try to short any of that, in my opinion, when we're looking for prices to make a new high or make a measured move up here. And this one is really tempting right here because it's a failed second entry short, but look at all that. It's just too many congested bars and tiny bars there, and it would have worked, but I just this is the key. When you see these, they're so tempting, but it's not a sure thing. So why take something that's not a sure thing? Wait on the sure thing. And so that's why I didn't mark it. I want to wait on a sure thing. And notice we made a double top here, and then we come down. There's a second entry long here, and you might take this one. I didn't mark it because there is support all the way across there, and there's room back to the EMA. But if I remember right, it's real close. And so again, it's not. So you can see that there's only 5 points there, 5 ticks there, and that's not enough room to scalp out. So that's not a sure thing. And look, it does turn down, even though it pushes on through. And that's the worry, is you don't know if it's going to be able to push through there or not. So avoid those. If there's plenty of room there, you probably take that trade. But without enough room, even though it's technically it's not a second entry, it's a first, second, third entry. But really, that looks like 2 legs down to me. I wouldn't have any problem with somebody telling me that they looked at that as a second entry, because I probably would too. And then we still don't make that measured move, and we turn down. And we don't make the new high on the range either. So, and then we turn down. So that's not a good thing. Plus, you're looking at this measured move, and you can't make any of those. So there's strong selling coming in here, and suddenly they beat it down, and next thing you know, you've got this huge sell-off here. I don't see, this is all too congested sideways. I don't see anything in here I like until right here. You actually have a second entry, but it's a little bit sideways. But the reason I like it is you got that high. You try to go higher once. Let's make this a little bigger. You try to go higher once and then twice. And it is a second entry short too. And it's a really bearish bar right off the EMA. And you tested that EMA a couple of different times. I like going short there. You're back in this range, the pink range, and so this would be your first actually the midline would be your first target, and then this one, and then of course a measured leg down here, but this thing doesn't hold, it doesn't even check up, it just keeps going into the close. But anyway, you got another new high there, and you try to go higher once, twice again. Only problem with this one is your signal bar doesn't look as good, but it's a failure, so it doesn't matter. So I marked it, but because of the signal bar, I like this one more because it does give you a bearish signal bar too, which leads you to believe, hey, we're probably going to go, because I don't think you're going to trap a lot of people here. That's the problem. And the thing too is it doesn't break below that bar. It breaks here. So really you're entering it here. So maybe you enter that one. But to me, this just looks like a range more. Let me try this again. It looks like a sideways congestion area more than it does a failure. So you just got to be worried about all that stuff. And I just don't think it's worth taking that one. It turns out to be a great trade, but I mean, if you only knew that in advance, everything would be easy. So, and you get a break here, move to a new low, then you try to go higher twice, and you get a second entry short there on a double. Really, there's a triple top across there. And you got a second entry short and a nice small, that's a small signal bar, 8 ticks. You can actually enter that with the original 8-tick rule almost. Drops down. You actually could look at this as a failure. But you've already got your break and a new low, and then you actually have 2 legs down because you get this, then the correction, and then another measured leg down. So that makes it real risky going short here anymore without a really good setup. And when this didn't break below that one, changes everything because now you got a 2-bar matching low, and you could tick lower and trap you, and especially this late in the day at 2:30. So I don't see anything else there I like, and that's how I saw it. So um, yeah, I really was hoping we'd go higher today, but just didn't happen. And again, as day traders, we don't care where the market goes as long as we get movement. That's all we care about. However, if you're like me and you have retirement accounts and long-term investments and other stocks and uh, 401ks and things like that. I got an old 401k from when I was back in when I worked in corporate America, and those are retirement accounts of mine that I care about. So I hate to see them get decimated, especially when I'm getting older and closer to retirement. So probably just prolongs my retirement. So I don't like the market going down. I prefer it to go up or sideways, but for the most part, up is better in my opinion. So anyway, that's the way I saw it today. I'm not going to beat around the bush. 21 minutes worth here. We'll wrap it up and we'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.